Let's get into today's market action with our first guest. He's the man the Bears love to hate. Fundstrat's Tom Lee. The Dow isn't up, and it looks like maybe the Dow closed higher by like 3.3 points. That's about the closest I've ever seen it. Yeah, I mean, there it is. Tom Lee, so let's look ahead to next week because that's when the action gets started again. I wonder if it's a pretty key test next week for market breadth, especially since this week we had a pretty strong start and a relatively weak finish. Earnings from Danaher next week, Visa, Coke and Boeing, Mondelez Thursday. Are those important?
Yeah, I mean, earnings really matter because, one, there's a lot of concern that, the Fed hikes have slowed the economy and, our company's able to deliver numbers and then keep guidance. That's going to matter a lot. But, of course, as you know, there's a huge macro event next week as well.
Yes, of course, that Fed decision. Something in your notes, though, made me raise an eyebrow. You say we also have to recognize stocks have advanced sharply in the past month, so profit-taking is healthy. Tom, profit-taking is healthy here?
Yeah, I think profit-taking is healthy because I think that's going to be part of the investor mindset. Investors who've been involved with tech and FAANG are enjoying pretty stupendous returns year to date. Now, it doesn't mean that when they take profits, they have to necessarily exit the market. But to me, next week is a story of, well, if the Fed surprises us in a way because it's more of a dovish pause, I think investors are going to look for ways to sort of find stocks that rise on easing financial conditions. And they may not come back to the FAANG. They might stick with tech, but they might broaden out into industrials and financials. So, yes, profit-taking, but doesn't mean the market has to go down. And
to your point, we did see the NASDAQ take a breather today. We did see some of those and this week, the big cap tech names in general sell off, in part because of earnings over the last couple of days with Netflix and Tesla, this rotation. One of the other questions that's getting raised right now is if we're overbought and we're due for a pullback or even a correction. Your thoughts?
The market's definitely overbought. We're 13% above the 200-day moving average. In the past, that's a sign of a strong market, but it is also a market that's vulnerable to bad news. So I'm kind of sympathetic to the view that there are signs of a correction. That's what Mark Newton, our technician, wants us to be alert to. But on the flip side, I think there are too many who are quickly calling this a top, and that puts me in the camp that whatever weakness we have may end up proving to be shallow, especially given we have a huge FOMC decision next week.
Expectation that we're going to see another rate hike next week. And I guess just as importantly, given the fact that we do have data like PCE at the end of the week, what does that mean for the disinflation narrative that is playing out in the market? And I know you've been speaking to.
I do think investors are still skeptical that there's disinflation. We have many conversations with our institutional investor clients, and they talk about how inflation is going to be sticky because of wages, and it might stick at 4% for far longer. But we're finding the glide path to core inflation and core PCE, could actually undershoot what a lot of people think over the next few months. And so I think that's one of the upside stories, that as soon as inflation softens at that pace, Fed officials themselves can actually start to breathe easier. And I think it causes many investors to rethink higher for longer.
So you say a couple hundred points worth of a correction. Well, it's not really a correction, I guess, if it's only a couple hundred points in the S&P, 5%. We'd need more than that for it to be technically a correction. But, a pullback of around 5% would be possible. Do you recommend rotating into some of those other names, cyclicals, versus the larger tech names that have done so well this year?
Yes, to an extent. I think it's important to stick with groups that are showing strength because we know that those are going to be groups that could end up having dip buyers. So that would put industrials, financials, I think that thing in energy, of course. But what makes us a little bit wary is some of the strength this week has been in the defensives. And I wonder if that's more of a reflexive action. But, if the defensives keep strengthening it, John, that would put the market more likely into a correction camp. But I don't think we're at that point yet.